Welcome back, everyone. Salman Rana back here, and now we'll be shifting our attention to Automotive Inc., a high-growth digital solutions provider for used vehicle dealers across North America through its innovative wholesale auctioning and retail features. I'm joined here by President and CEO Jason McLenaghan, alongside CFO Andy Boland, who continue to successfully guide Inc. to rapid expansion across Canada and the US. So before we start, again, please ensure that your microphone is on mute and your camera is turned off during the session. Please ensure that your name appears on screen so we can properly address any questions that you may have. If you have a question, you can either raise your hand or you can submit your questions in the chat. And our questions will be moderated by Jordan Simon, who will also be handling any technical issues. With that said, let's move on to the Q&A. First of all, thank you, Andy, and thank you, Jason, for joining us today.
Yeah, thanks for having us. Like I said, hopefully next time it'll be in person. Get rid of this Zoom thing.
Absolutely, absolutely. My first few questions are about Inc.'s growth plans. So Inc. continues to focus on growth in the US via both organic and acquisitive means. So on one hand, while we're seeing organic growth efforts underway across the East Coast, we're also seeing some M&A activity in the Midwest and West Coast that have helped establish anchor assets in those regions. So what are the factors that determine where growth efforts should be focused on the most? Is it related to the low level of competition, existing relationship with dealers or salespeople that can be onboarded onto Inc.'s platform, existing infrastructure? So what exactly are the factors that come into consideration there?
Yeah, I can walk through kind of our logic when looking at M&A. I mean, historically, the majority of our growth has been organic. Like Canada was the lion's share of our growth until we made our first acquisition actually in the Montreal market late August of last year with Trade Helper and ESP. But we take a lot of factors into play. And, like we talked about during our IPO roadshow, we have aggressive expansion goals to be coast to coast in every major market in the United States by the end of next year, which is incredibly aggressive. So to do that completely inorganically is very difficult. Organically is completely difficult. So, we're going to look for not necessarily geography, even though that's part of our strategy. It's really who's got a very strong dynamic team that have good regional relationships with dealerships that really are bought in and adapted to change. And they see the future of the wholesale or marketing industry the same way we do. So very aligned vision, adapted to change. They do have to be in a very dense populated area. It's something that we would look for to make sure there's a critical mass of dealerships servicing that marketplace. And then it's really about the forward-thinking teams that we're enabling to leverage our technology and give them a tool they've never had to compete before and help get more marketplace participants on our platform and continue to scale out around the assets. So our first acquisition that we made was in Detroit with the Fastlane Auto Exchange team. So it's a lot of those factors: population density, geography, but really not being too particular as long as we have a great solid team that's going to be joining the company with a shared vision.
Okay, and that being said, any indication as to how many regional centers Inc. is looking to establish within the US? And this question only springs to mind, looking at competition. If I talk of names as ACV, when they had their analyst day recently, they talked of specific regions and how they've been expanding. So any similar plans over at Inc.?
Yeah, I can take that, Salman. Thank you. Yeah, and thanks for having us, and look forward to meeting in person and having this conference next year in person, hopefully. Here we are. So as we think about the U.S. expansion from an organic point of view, right, we've had a lot of success in Canada in reaching scale in Canada. And the way that we kind of look at the U.S. opportunity is that there's about 5 times the number of dealerships in an addressable market in the U.S. that there is in Canada. And so if we just think about how we rolled out Canada, district by district within the region and apply that logic to the US, we're essentially attacking it from the US as breaking it up into 5 different sales regions that then have a sales hierarchy underneath them for how we go to market and cover the ground with our sales team. But really looking at, the West Coast, obviously with the acquisition we made with ABS, and then several other regions across the US that, I don't want to get into too much detail on the strategy, excuse me, but that's generally how we're thinking about it.
That's great color. Thank you, Andy. And as the company continues to gain scale and gain market share, is this mostly as a result of Inc. capitalizing on new greenfield opportunities, or is this as a result of displacement from competitors? If it's the latter, what factors do you think are leading to this move over to Inc.?
Yeah, it's a real balance of both. I mean, you can't grow rapidly without, first of all, changing behavior. There's been a shift for many, many years, long before COVID came along, where physical auction owner operators, users were transitioning to digital, and that's been definitely a big part of our growth. But more importantly, right now, we wouldn't be able to put the growth rates up that we have the last 12 months, 18 months. With the lack of inventory, if we weren't taking market share from somewhere else and from our competitors. So it's really been a balance of both. And the customer base just continues to be attracted to our set auction times, where they can buy and sell inventories in less time. And the lion's share of inventory in the United States still remains to be sold in a 60-second live auction format through physical auction. The dealer-to-dealer auction marketplaces have been the fastest growing for many reasons. They'll continue to do that. But that philosophy has allowed us to really capitalize on some of the holes that we saw in our competitors, and allowed us to take more market share throughout the process.
Understood. And just on that topic, Jason, could you maybe talk about the trends that we were seeing towards online auction, the transition that was going on pre-COVID, and how you think COVID basically sped that up?
Yeah, the transition was happening fast and furious. I would say slow and steady for years, and then fast and furious long before COVID hit. So when COVID hit, I would say there were those last few, call it naysayers, where they didn't want to buy a car online or sell a car online, that were really forced to give it a try. And then I believe they were pleasantly surprised. The experience was great. They were able to be more efficient and maintain control of their inventory better. So I think it pushed those final few dealers, I would say, or that percent of the market, to give it a try. And they've been retained and said, this is a pretty great way to do business. So it's been happening for many years, but it's definitely not going back.
Got it. Oh, that's great, color. Thank you for that. And now moving on to the product and your solution offering. So first question. So again, when we look at competition, the competitors continue to bring in and market new product features, including enhanced vehicle profiling through sound and better image quality, to bringing in AI and ML to leverage automation. I know E-Ink has been quite busy on that front as well. So what kind of product updates should we be expecting at both eBlock and EDealer in the coming months?
Yeah, as always, certain product enhancements and features you keep a little close to the chest for competitive reasons before they come to market. But what I would say is we've been very open with a couple that we'll talk about. And, we're always looking at building new products and features to enhance the experience with our core offering. And that's going to continue, released all the time, that we don't make a big splash about, but it's always continuing to innovate and focus on the customer experience. But right now we're really focused on our beta test that's going on with our brand new digital retailing platform, EDealer. It's going incredibly well with a segment of independent dealers. And we're going to continue gathering feedback and then iterating on that feedback with a full-scale launch plan for later this year. And that's going to be the first time that a company has built both a digital retailing platform and a wholesale platform from the ground up in-house, with the vision of intersecting. So I'm really looking forward, and I would expect people to be able to hear more about that here in the coming quarters, especially as we make that retail wholesale connection. That's going to make both of our business units far stickier. And then on the eBlock side, on the wholesale marketplace side, we're highly focused on leveraging the data and the inventory that we have the availability to pull into the platform. But ultimately, it's about helping dealers buy, sell, and manage their inventory more seamlessly. But we want to connect the online and the downstream physical auction experience into a single platform. So that's something that we're highly focused on here in 2022 that we'll share more with later in the year.
Okay, and that beta that you were talking about, that was actually my next question. So I'm not sure if you'd be able to quantify, either Andy or Jason, but what kind of potential does this have to disrupt the industry, with an end-to-end solution like this? And you've already mentioned that it's already gaining some good traction and receiving a great response. So could this supercharge your growth going forward then?
Yeah, so we're in the very early innings right now. And just like eBlock in Canada, we use Canada as our playground to get our wholesale business model and our product down. That's going to be the same right now. So this isn't going to be something that's going to be turnkey, ready to just jump into the United States. We want to make these inventory connections and data connections with retail and wholesale, and really get that model operating in Canada before we bring a digital retail product solution to the United States. And it worked well for us with the eBlock platform. It's going to be the same on the digital retailing side of the business. That said, Canada, we are the #1 website solution digital advertising provider in the market today. But some of the features and enhancements that are coming out are going to let us go after a customer segment that we didn't have before to even help that SaaS revenue go. But what it's going to do is, once the product is built, It's on our brand new tech stack. It's going to allow us to build future SaaS products to then increase our monthly recurring revenue per rooftop. So I see as our marketplace participant group of business grows, we're going to be able to then follow on with additional product suites to increase that MRR per dealership. So that's where I really see the opportunity to future growth and accelerate that retail side of our business.
Got it. Yeah, that was actually where I was going to get to next. So like most of the focus right now remains on eBlock, but again, regarding EDealer, have the SaaS solutions in the past been a relatively tougher sell? Do you think the market right now is going through a certain education phase where they're, learning of all the benefits of transitioning to online, getting their inventory needs, their website needs met, through a single provider as EDealer? Or again, do you think that's not the case, or has the market, is the market somewhere advanced in the development phase?
Yeah, yeah, Salman, it's a great question. And, I think we have dedicated investment going into both the SaaS product set with EDealer as well as eBlock. So definitely eBlock taking up a lion's share of attention, just given the explosive growth that we're seeing on the marketplace. But that being said, we've seen steady, 20 to 30% growth in our subscription revenue. And I don't think it's a lack of education or a tougher sale. I think when it comes to our subscription product set and that we've had in the past, right, it's been a longer sales cycle. So if you think about a dealership looking at their digital marketing suite, that is their consumer facing brand online, right? And so for them to swap out their digital retailing platform is not as simple as it is to just sign up for the eBlock marketplace and start transacting vehicles. So it's a longer sales cycle, but I think the industry is pretty well versed in the need to have an online presence and be consumer facing first and foremost online as well as in person. So so I think, like I said, it's a longer sales cycle. But that being said, we've had tremendous success. I mean, I think we did 7.5 million in subscription revenue in 2021, which was up 36% year over year. And again, that's mainly been focused on the dealer customer base in Canada without much expansion into the US yet at all.
Yeah, actually, so that's what I was going to ask, Andy. So again, these SaaS solutions are pretty much at the nascent stage, if I may put it that way. Right now, there's a lot of runway for growth going forward, especially as they expand into the US, right?
Yeah, absolutely. Yeah, I mean, I think we don't want to go until we're absolutely ready, but we are focused on right now with the EDealer product in Canada, upgrading all of our dealers onto the new platform. It's going to create tremendous synergies with the eBlock platform, as Jason talked about a little bit. So yes, we see the US as an opportunity to introduce some SaaS product down the road, but we're following our product roadmap right now and focused on the development in Canada first.
Yeah, that makes complete sense.
Yeah.
And when I think of profitability, so I know that due to the back-ended nature of E-Ink's growth plans, it takes around 12 to 18 months to break even in any certain region. Have you reached that stage within any regions in the US till date?
Yeah, short answer is no. If you think about when we IPO'd right last November, raising the capital, the primary use of that capital is going to go into expansion in the US. We did complete the ABS acquisition as a private company, and that gave us a beachhead in the West Coast. And they were generating, they were roughly about break-even company. And as we looked at investment and building out the presence in the West Coast to compete with some of the competitors there and attract market share, as well as think about just getting going in some of the other regions that we talked about, the other 5 regions that we mentioned earlier. We're 4 months into that 12 to 18 month break even period, right? So when you're building a marketplace organically, obviously it takes a little bit of time and a ramp up period where you're not operating at full capacity as you add on all the sales reps and territory. But we are fully confident that as over time and that period that we talked about, the ramp up will happen. We'll start to see the break even occur, and similar to what we see in some of our more mature markets that we've already proven, profitability is there. The model works, and so we're excited to continue to show progress towards that over the next 12 months.
Yeah, and pretty much building on the Canadian, the model that you've been using in Canada, basically.
That's right. Yeah.
Understood. Now, just turning our attention to the competition. I know this was something that was talked a lot about on the last conference call as well, but regarding the recent Carvana Odessa acquisition in late February. So Carvana states that it will continue to operate and expand Odessa's auction business. Do you still see this as an opportunity to displace dealers on Odessa's platform?
Yeah, absolutely. This move, I think we said on the last conference call, it really, validates our thesis of land meets tech, what I mean? And when you look at Carvana's press release and earnings call following the acquisition, they really clearly articulate, what part of their priority is the wholesale auctions. It was actually the bottom of the barrel, right? So in order to really service their retail needs, they need every inch of land and reconditioning at these facilities just to meet the consumer where they're doing business and digitally retail those vehicles. So it's really low on the totem pole as far as like their order for priorities. And I think that's going to be a major opportunity. And, not to mention, Carvana knew going in, there was going to be a customer attrition. We're already seeing it. There's big, large OEMs that have already gone out in market like Ford and GM that says they will not support Odessa auctions anymore. And there's more and more by the day. So there's going to be lots of opportunity. I still feel like this is very good for us and others. It will take time to feel that. I mean, the transaction is not even closed yet. But, I believe that this is a major opportunity to really go after a meaningful market share. And another reason why we're going to be less concerned about where we invest. We're going to always be concerned where we invest the money, but we might expedite that to go faster, stronger in different regions with the opportunity that we feel this just presented with ourselves.
Yeah, definitely looks like a positive catalyst for you guys as well. So regarding your M&A plans in particular, what kind of multiples are you now seeing, seeing in the private space following compression in the public markets? Will M&A activity be impacted in any way as a result?
Yeah, Salman, for our M&A strategy and kind of the pipeline that we've been building, I think that the public market sell-off was largely experienced by the technology sector, right? And that if you look at the acquisitions we've done to date, they've predominantly been more focused on acquiring some of these established regional marketplaces. We haven't been buying them necessarily for the technology that they bring. We believe that we're best-in-class technology and that a lot of these acquisition targets have developed profitable, strong regional marketplaces with great customer relationships. And so we look at a great opportunity to integrate those marketplaces, help accelerate some of the digital adoption and create the synergy there. I would say that multiples that we've seen have not really been impacted by the sell-off in the public markets, just given kind of the type and the classification and the style of the acquisitions that we've been making. But, I think other than that, obviously we're keeping our eyes open and looking for opportunities if the appropriate technology company comes along that makes sense from a buy versus build type of product strategy. So, we'll see there, but right now we've been purely focused on our M&A strategy of building our marketplace presence across the US.
Understood. And Jason, just moving on, again, Andy, feel free to pitch in if you have any thoughts on this. But so basically, there are two perspectives right now. So on one hand, you have your inflation and interest rate worries, which might become a key concern and may lead to reduced activity at dealerships. But on the other hand, we actually came across some research that stated that like the amount of people that have been driving in the US, the miles that have been driven, they've been pretty inelastic in the last few months, despite all these inflation worries, worries of interest rates going up and again, affecting financing. So where do you guys exactly stand on this? And do you think this will be a positive, a negative, or a neutral factor when it comes to activity at eBlock?
Yeah, it's fairly neutral. I mean, the nice part about being in the auction business is everybody still needs to buy and sell cars, and we're just a liquid marketplace that creates the competition. So when the market is down and dealers need to liquidate their assets, we're there to help them get a competitive market to get them the highest return. And when the market is up, they use us as well to get crazy money for their inventory if it's not turning. So it's kind of one of those industries that it stays kind of neutral or always kind of in the middle. That said, where it could, touch is, interest rate hikes are never great in any industry with borrowing power. But what I would say right now is that's really neutral because there's no inventory. the demand for vehicles is still never been higher. And there's so much competition for every car. I mean, dealers are still taking orders and taking 3, 4, 5 months to deliver that order, sometimes a year for the vehicle. So the backlog of deliveries for the retail consumer, new cars, is nowhere near where it should be. So I believe that's going to have a neutral effect for the time being. And then the only thing that I can see is it won't be a dramatic cliff when inventory kind of starts to pick back up. It's just going to be a slow and gradual taper down, because prices for used cars couldn't stay where they were. A lot of them were selling for over MSRP and over retail price in wholesale. So it's that wasn't a long-term model.
Got it. And if I could just add a follow-on question there, Jason, since we're talking about this, again, the market's view is still pretty much mixed on when they expect, the semiconductor shortage to, ease up a little bit and again, help aid that new vehicle production. Where do you guys still stand on this?
Yeah, it's so hard to predict. It's a moving target. I think right now we've seen nothing on our end that would indicate that the pipeline's opening up. I'd say certain OEMs, you're starting to see a little bit start to turn, but a lot of them are still in the same positions that they were, and orders that they've been taking are not showing up in the amounts that they thought. So I still remain pretty positive this is later this year. This is not going to be a mid-year. This is going to be later this year where I believe we're going to start to see the wheels start to spin. And we're excited for that because, we've worked really hard during this time to, take cars from our competitors and grow our marketplace participant count. So when the volume per transaction comes back to follow on the growth and user base that we've accomplished over this headwind we've been faced with, I think it's going to turn into a tailwind. So I'm really excited to experience that later this year, I hope.
Interesting. And just talking about, your current market share in Canada. So who do you believe are the main competitors for E-Ink when it comes to Canada? And do you still see any opportunities for rapid growth within this market specifically?
Yeah, absolutely. I mean, you saw it last year. I mean, we had incredible growth coming out of our last earnings call, and that's several years of the same, right? So, I mean, you obviously can't set the expectations and think you're going to hit that close to triple-digit growth every single year, right? So at the end of the day, there's still a lot of room to run in the Canadian market. We feel like we've got a ton of momentum. We've got the team, we've got the technology. What I'm really excited to start to leverage is bringing retail and wholesale together. That's where I really believe we can just really take over. Car Global is still the top competitor in this market, but they do not have a digital retailing arm. And when you look on the wholesale side of the business, the retail side of the business, there's lots of other, players on the EDealer side selling websites, but none of them have an integrated system and solution to power the wholesale automotive and how to appraise a trade in. So I think we've definitely sacrificed some innovation, I would say, on the eBlock side to focus the last several years on the EDealer side to bring these two together. And I'm really excited to see that come to fruition. It's been many years in the making, and I think that really positions us for future growth in Canada.
Okay, that's great color. Thanks, Jason. So I'm just going to squeeze in 2 questions since we're almost out of time here. Jason, you've already alluded to this in one of the early questions, but post-COVID, are you seeing any dealers opting to return to in-person physical auctions, or again, have virtual auctions proven sticky?
Yeah, no, virtual auctions have proven incredibly sticky. I've been a big believer, said it for a long time, and I wouldn't be buying any physical auctions if I didn't believe they had a place in the future. And I believe it's the one that gets it right with physical meets digital is going to be the winner. Really logistics and land help provide that experience that the customers desire. I've seen a lot of physical auctions in the last few months that have started driving cars back through the lanes, inviting dealers back in the lanes, and the attendance is nowhere near where it was. So even despite it opening back up, it's never going back to the way it was. It'll go back to a fraction of what it was, but technology that can power it all is going to be a very strong recipe.
Okay, and just one last question to round off our conversation. So is there any element to E-Ink story that you believe investors are currently missing or mispricing?
I'll take that one, Salman. I think one of the things that we are really excited about that, doesn't get enough airtime just given the dynamics in our financials, but the retail product platform and the opportunity that we have to bring the two together with the marketplace is really, really exciting and a tremendous opportunity for us. If you think about the number of marketplace participants, we now currently have over 10,000 dealerships transacting on our eBlock ecosystem. To be able to introduce subscription-based products that helps them tie together the full inventory life cycle across the retail experience into the whole back-end wholesaling experience is going to be pretty transformational in this industry. And all being on the same tech stack is pretty unique. So we're really excited about that. And then, as Jason mentioned too, and he just kind of alluded to it, the land meets technology strategy is one that we feel very strongly is the winning recipe. And so if we think about, the nice thing that we have is we are not land first, trying to disrupt and make the transition into a digital first age. But we're leading with technology and see the value in bringing a lot of these physical locations into a more aligned strategy of time is what we think is the right strategy. So we're really excited about that. And those would be the two areas that I think, probably deserve a decent amount of airtime in our conversations.
Okay, perfect. Thanks very much, Jason and Andy. That's unfortunately all the time that we have for this fireside chat. But again, hoping that all the attendees enjoyed this discussion as much as I did personally. So yes, this concludes our presentation with E-Inc. Thank you all for attending. To exit the webinar, click the leave button, or you can remain in the room for the next presentation. The next presentation will be with Callian at 3:15 p.m. Thank you, Jason. Thank you, Andy, again. Have a great
Thanks for having us. Appreciate it.
Thank you very much.
Have a good day.